Hello students, how are you all? I hope you are all doing good and I welcome you all to the ninth video lecturing session on financial markets and services. Moving further, the title of the class is Financial Markets. Subtitle of the session is Merits and Demerits of Stock Market, that is secondary market. Next we have quick recap on previous class. In the previous class we had discussed about players in stock market who play the roles. So in the stock market we had close to eight players. The very first player was Securities and Exchange Board of India, SEBI, as a regulator. It used to play its role, and we had stock exchanges who used to act as platforms for the trading of the securities. And the third participants or players of a stock market was depositories who used to provide the services of the platform or the storage of the digital instrument certificates. And we had depository participants through whom investors approach to open a demat account. And we had stock brokers who used to put the intents and who used to sell the securities on behalf of their clients. And we had investors and traders for whom all other players play the role. And we had clearing corporations who is to ensure the successful uh, completion of the transactions, either payment of the money or transfer of the shares to the concerned person who used to pay the money. And lastly we had banks which used to provide the banking facilities, including the opening of the basic bank account and linking the basic bank account to the trading account and demat account. So these are the contents which we had discussed in the last class. Let us proceed further. So we have session outcome, learning objectives of the chapter. Learning objectives is same for up to 12 sessions. That is for the first chapter. We have session outcome which is separate for all the sessions. So by the end of this session, students will be able to understand the merits and demerits of stock market. So you should be able to understand what are the merits or pros and cons of stock market. So we directly proceed to the core content of the session. So the very merit of the stock market is an ownership stake in the company. So let us think how people can become or how investors can become owners of a company by investing in secondary market. So it means the shares listed in the market are either equity shares or preference shares which are convertible to equity shares. So these shares allow the shareholders to have an ownership stake in the issuing company. So equity shares or the preference shares which are convertible to equity shares are unique shares which will have some of the benefits and some of the risks to the issuers. So both the holders of both of these shares will have the ownership stake in the company. In detail, you will come to know how they become the owners of the company or how they get the stake in the ownership of the company when you come to know the difference between the equity shares, preference shares, and equity shares and debentures. You will clearly know how the shareholders become the owners of the company. So let us move further. Next point we have is exclusivity in transaction. So membership of a stock exchange markets and resultantly trading used to be an exclusive activity. How? Only the investors or the investors through either brokers and sub brokers can enter into the transaction of the stock market. No other persons can enter into the stock market transactions. So in this manner the secondary market provides the exclusivity in the trading transactions. Next we move further. Return on investment. As the majority of the listed shares are equity shares, their value is directly related to the value of the company. Thus, when a company is doing well, there is a substantial capital appreciation in the shares of a company which provides good returns in the form of dividends. Or next point we have the shares will get capital appreciated. So that we discuss in the next point. So good return on investments in short term. So as compared to the other investment avenues, for example, investment on gold or bank investment, fixed deposit investments. So investment in the stock market has got good lucrative investment even in short period. So people invest in short term transactions or short term financial instruments, that is investment in intraday. So a person will purchase shares morning 9:15, and he should or he will sell those instruments before 3:15 of that particular day. So in this manner, secondary market provides good return on investments even in very short term span of time. So we move next. Right to vote. Where to vote? Who to vote? The equity shares give a right to vote to the shareholders on the matters concerning their interest or the company interest. Therefore, the Companies Act 2013 requires the approval of shareholders in annual general body meetings or the extraordinary general meetings to take important decisions. So, in all these criteria, the equity shareholders will have voting right. This enables the investors of the company to have a say in the company's operations or opinions. So we move further. The next point we have is interest well protected by the regulatory bodies. So the whose interest? It is the interest of the investors. So who protects and how is it protected? We discuss it like this. So the listed companies are strictly regulated by the SEBI regulations, like SEBI prohibition of insider trading. No person who is involved in SEBI can participate in trading activities. Under regulations 2015 SEBI Act, so prohibition of fraudulent and unfair trade practices, which are listed as unfair trade practices, they are not supposed to carry out. And regulations according to the 2003 SEBI Act, intermediaries regulation, so which is passed in 2008. So all these regulations stand in favor of the investors in such a way that they are not left unprotected. The next point we have is protection against inflation. So how is it? The stock investments are a good measure to avoid inflation, as the stock market investments may fluctuate during a short term period. So that is, the value of the prices of the shares may go up or come down in a short term, but due to the general capital appreciation over a longer period, the security's value increases at a rate which is greater than the inflation rate. It means to say the returns will be always greater than national inflation rate. So, so that the investor's money doesn't get decreased in its time value. So that is how the inflation, the you know investment in the secondary market provides to protect against the inflation. Next point we have is easy to buy and sell. So the stock market investments are one of the most liquid forms of investments, unlike fixed deposits in the banks or government bonds. Of course, fixed deposits are more liquid. They can be liquidated by deducting the rate of interest accrued thereon. So government bonds are little bit, they're not so liquid in nature. So there is no stipulated investment period, and as compared to the real estate transactions, investment in the share market, that is stock market, is highly liquid in nature. Like that is transfer of the title deeds is very lengthier in the real estate. That is what it says. As compared to the real estate transactions, the process of transfer of the title of the property has considerably less legal formalities quicker. So which is quicker? The investment liquidation of the assets in the stock market is quicker than the real estate transactions. And the next point we have is dividend income. The companies also provide an annual income in the form of dividends to the shareholders. This is not capital appreciation, this is return on investment, periodical return on investment. So, although in case of the equity shares, the amount may differ corresponding to the profits of the company in that particular year. So, the where there is no profit, they may not get any dividend. But whereas if there is ample or huge profits, the dividends may be of a seizable amount. So this is what we call it as either risk. So I had just foregone putting the points. So the next point we have is diversification of risk. So another crucial feature of share investments is the diversification of the portfolio allowed under it. So investor can choose any company for the investment purpose or any company's shares for the investment purpose, or he can choose any particular industry for that purpose. So in this manner he can mitigate it. So the investor can invest in securities of opposite kinds, that is opposite kind of industries and companies, which mitigate the risks and increase their chance of profitabilities. Not if not even profitabilities, he can mitigate the risk of ending up with the losses. Certainly, depending upon the ratio of his investments, he may get the profit. And next point we have is wealth growth and maximization. So how the wealth is maximized? It has already been discussed. Investment in the stock market gives two main benefits. They are periodical income annually in the form of dividend. It is already discussed in the previous points. So that is dividend income. So and the next second benefit is prospective growth in the value of the securities or appreciation in the value of the investments. This is what we call it as capital appreciation, that is increase in the value of the assets. So assets are nothing but the financial instruments on which the investor has put his money. So these are all the list of the benefits of investment in the stock market. Now we will go to the demerits of stock market. The probable demerits in the investment of stock market would be volatile investments. So how the investments are volatile, we'll look into it. The share market is extremely volatile as there are numerous factors affecting the value of the shares. What are those numerous factors? They are government policies or frequent changes in the government and the results of the government, that particular government policies, budgets, sectoral events, company disclosures, change in the management of the company. So all these will affect on the value of the shares. So in this background, so the investment in the stock market is prone to volatile. Next point we have is high brokerage and low margin. So, although the market has now become much more accessible, but still brokers are needed for smooth functioning of the market. But the brokerage charged by the brokers is high, and which is leading to the lower profit margins for the investors. So, so this is the implication of the brokerage on the lower margin of the profit. And the next disadvantage we have is impulsive investment. So the impulsive investments like investments purely based on one's impulses or opinions or boost ups or hearsay, ಯಾರೋ ಹೇಳಿ ಯಾರೋ ಹೇಳಿದ್ದನ್ನ ಕೇಳಿ ಇನ್ವೆಸ್ಟ್ ಮಾಡೋಂಥದ್ದು ಅಂಥದ್ದು, and not on research based are likely to result in losses to the investors. So with experience and past losses, the investors learn the stock has to be analyzed first and invested later. So, impulsive investment would be a loss to the investors. And the next point we have is lack of knowledge. So, most of the investors depend on the advices of their brokers and the general market trend, which may not be in their best interests. Although the SEBI and stock exchanges require issuer companies to disclose relevant information for the benefit of the investors, the majority of the investors are incapable of analyzing and utilizing this information for their benefit, and they are dependent on their stockbrokers and their financial advisors. So, if their financial advisors are not guiding them in a proper way, investors end up with the losses. And there is an acute requirement of investor training and educational exercise by the regulators or by the companies coming together. And the next demerit we have is subject to high risk. What kind of risk? Apart from the volatility of the market, as explained in the above points, the equity investments carries the highest amount of risk even in terms of corporate finance. According to the section 53 of Insolvency and Bankruptcy Code, the shareholders are paid at last after paying all other debts of the corporate debtors, even the debt instruments, both secured and unsecured creditors. ಅಂದರೆ ಶೇರ್ ಕಂಪನಿ ಏನಂತ ಮುಚ್ಚುವಂಥ ಪರಿಸ್ಥಿತಿ ಬಂದಾಗ ಅಥವಾ ಮುಚ್ಚುವಂಥ ಸಂದರ್ಭದಲ್ಲಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ಗೆ ಕೊಡುವಂಥ ದುಡ್ಡು ಯಾವಾಗಪ್ಪ ಅಂತಂತಂದರೆ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ದುಡ್ಡು ಬಿಟ್ಟು ಅದಕ್ಕೆ ಮುಂಚೆ ಉಳಿದಂಥ ಡಿಬೆಂಚರ್ಸ್ದು, ಕ್ರೆಡಿಟರ್ಸ್ದು, ಸೆಕ್ಯೂರ್ಡ್ ಕ್ರೆಡಿಟರ್ಸ್ದು, ಅನ್ಸೆಕ್ಯೂರ್ಡ್ ಕ್ರೆಡಿಟರ್ಸ್ದು, ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ದು, ಅವ್ರಿಗೆಲ್ಲರದ್ದು ಬಾಕಿ ಏನಿರುತ್ತೋ ಅದನ್ನು ಕಟ್ಟಿದ್ದಾದಮೇಲೆ ಏನಾದರೂ ಉಳಿದಿದ್ರೆ ಅದನ್ನು ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ ಕೊಡ್ತಾರೆ. ಸೊ ಇದೊಂದು ದೊಡ್ಡ ರಿಸ್ಕ್ ಆಗಿ ಪರಿಣಮಿಸುತ್ತೆ ಯಾರಿಗೆ? ಸೊ ಯಾರು ಶೇರ್ಸಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡ್ತಾರೋ ಸ್ಟಾಕ್ ಮಾರ್ಕೆಟಲ್ಲಿ ಅವ್ರಿಗೆ ರಿಸ್ಕ್ ಇದ್ದಿದ್ದ ಕಡೆ ಪ್ರಾಫಿಟ್ ಇದ್ದೇ ಇರುತ್ತೆ. ಬಟ್ ರಿಸ್ಕ್ ಇದ್ದಾಗ ಬಟ್ ವಿ ಕೆನಾಟ್ ಕ್ಯಾಲ್ಕುಲೇಟ್ ವೆದರ್ ದ ಕಂಪನಿ ಪೋಸಸ್ ದ ಲಾಸಸ್ ಆರ್ ಪೋಸಸ್ ದ ಪ್ರಾಫಿಟ್. ಇದು ಒಂದು ರೀತಿ ಹಾವು ಏಣಿ ಆಟ ಇದ್ದ ಹಾಗೇನೆ ಸ್ಟಾಕ್ ಮಾರ್ಕೆಟು. ಸೊ and the next demerit we have is deliberately inflating investments. So how the investments are deliberately inflated anta nodona. So many times specific group of investors or any institutions deliberately inflate the prices of particular companies shares. How? By dumping their money on its shares without actual performance of the company. Andre ಆ ಕಂಪನಿದು ಯಾವುದೇ ಪರ್ಫಾರ್ಮೆನ್ಸ್ ಇಲ್ಲ ಅಂತಂದ್ರೂ ಗ್ರೂಪ್ ಆಫ್ ಇನ್ವೆಸ್ಟರ್ಸು ಯಾವುದೋ ಒಂದು ಪರ್ಟಿಕ್ಯುಲರ್ ಕಂಪನಿ ಶೇರ್ಗಳ ಮೇಲೆ ದುಡ್ಡನ್ನ ಸುರಿತಾರೆ. ಸೊ ಸುರಿದು ಏನು ಮಾಡ್ತಾರೆ ಅಂತಂದರೆ ಆ ಕಂಪನಿ ಶೇರ್ಸ್ ಬೆಲೆಯನ್ನು ಒಂದು ಪೀಕ್ಗೆ ತೊಗೊಂಡೋಗ್ತಾರೆ. ಸೊ ಇನ್ವೆಸ್ಟರ್ಸ್ ಏನು ಮಾಡ್ತಾರೆ, ಟ್ರೆಂಡನ್ನು ಫಾಲೋ ಮಾಡ್ತಾರೆ. ನಿನ್ನೆ ಇದ್ದಂಥ ಬೆಲೆ ಇವತ್ತು ಜಾಸ್ತಿ ಆಗಿದೆಯಲ್ಲ ಈ ಕಂಪ್ನಿದು, ಇವತ್ತಿದ್ದಂಥ ನಾಳೆ ನೋಡ್ತಾರೆ ನಿನ್ನೆ ಇದ್ದಂಥದ್ದು ಇವತ್ತು ಜಾಸ್ತಿ ಆಗಿದೆಯಲ್ಲ ಅಂತ ನೋಡ್ತಾರೆ. ಸೊ ಬೇಸ್ಡ್ ಆನ್ ದ ಟ್ರೆಂಡ್, ಹೋಪಿಂಗ್ ಫಾರ್ ದ ಇನ್ಕ್ರೀಸ್ ಇನ್ ದ ಪ್ರೈಸಸ್, ಇನ್ವೆಸ್ಟರ್ಸ್ ಪುಟ್ ದೇರ್ ಮನಿ ಆನ್ ದೋಸ್ ಶೇರ್ಸ್. ಸೊ unfortunately one find what these group of investors who planned well in advance, they start selling the shares. ಅವಾಗ ಏನು ಮಾಡ್ತಾರೆ, ಎಲ್ಲರೂ ಒಂದೇ ಸಮನೆ ಸೆಲ್ ಮಾಡಿದಾಗ ಸೊ ಈ ಕಡೆ ಕೊಂಡ್ಕೊಳ್ಳೋರು ಇರ್ತಾರಲ್ವ ಅವರೆಲ್ಲ ಹೈ ಪ್ರೈಸಸ್ಗೆ ಕೊಂಡ್ಕೊಂಡ್ಬಿಡ್ತಾರೆ. ಬಟ್ ಆಕ್ಚುಲಿ ಆ ಕಂಪನಿ ಅಷ್ಟೊಂದು ಚೆನ್ನಾಗಿ ಪರ್ಫಾರ್ಮ್ ಮಾಡ್ತಿರೋದಿಲ್ಲ. ಸೊ ದಿಸ್ ಈಸ್ ಡೆಲಿಬರೇಟ್ ಇನ್ಫ್ಲೇಷನ್ ಆಫ್ ದ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಆರ್ ಡೆಲಿಬರೇಟ್ಲಿ ಇನ್ಫ್ಲೇಟಿಂಗ್ ದ ಶೇರ್ ಪ್ರೈಸಸ್ ಆಫ್ ಎ ಪರ್ಟಿಕ್ಯುಲರ್ ಕಂಪನಿ. ಸೊ ದಿಸ್ ಈಸ್ ಬಾರ್ಡ್. ಸೊ ಈ ರೀತಿ ಮಾಡುವಂಥದ್ದು ಅಪರಾಧ ಅಂತ ಇದನ್ನು ಬಾರ್ ಮಾಡಿದ್ದಾರೆ. ಬಟ್ ಅಲ್ಪ ಸ್ವಲ್ಪ ಪ್ರಮಾಣಕ್ಕೆ ಇದು ನಡೆಯುತ್ತೆ. ಆ್ಯಂಡ್ ನೆಕ್ಸ್ಟ್ ವಿ ಹ್ಯಾವ್ ಇಸ್ ಥ್ರೆಟ್ ಆಫ್ ಸ್ಕ್ಯಾಂಡಲ್ಸ್. Share market has left with few black dots of scandals by the promoters of the company in the form of misappropriation of the funds and fraudulent and anonymous investment to convert black money into white money. ಸೊ ಈ ರೀತಿಯಾದಂಥ ಘಟನೆಗಳು ನಡೆದಿದೆ. ಸುಮಾರು ಘಟನೆಗಳು ಕೆಲವೊಂದು ಸಂಸ್ಥೆಗಳೆಲ್ಲ ನಡೆದಿದೆ. ಮೇ ಬಿ ಸಹಾರಾ ಕಂಪನಿ ಸ್ಕ್ಯಾಂಡಲ್ ಇರ್ಬೋದು, ನೆಕ್ಸ್ಟ್ ಸತ್ಯಂ ಕಂಪ್ಯೂಟರ್ಸ್ ಸ್ಕ್ಯಾಂಡಲ್ ಇರ್ಬೋದು. ಇವೆಲ್ಲನೂ ಈ ಏನು ಕೆಲವೊಂದು ಕನ್ವರ್ಷನ್ ಆಫ್ ಬ್ಲ್ಯಾಕ್ ಮನಿ ಟು ವೈಟ್ ಆಗಿರ್ಬೋದು, ಕೆಲವೊಂದು ಮಿಸ್ಅಪ್ರೋಪ್ರಿಯೇಷನ್ ಆಫ್ ದ ಫಂಡ್ಸ್ ಆಗಿರ್ಬೋದು. ಸೊ ಈ ರೀತಿಯಾದ ಕಂಪನಿಗಳಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡಿದಾಗ ಆಬ್ವಿಯಸ್ಲಿ ದೆರ್ ವಿಲ್ ಬಿ ಎ ಥ್ರೆಟ್ ಆಫ್ ಸ್ಕ್ಯಾಂಡಲ್. ಸೊ ದೀಸ್ ಆರ್ ದ probable or possible threats of investment in the stock market. So next we are at the quiz time. So the very first question goes like this: what does bull market represent in stock market? The options we have are fall in share prices, stable share prices, increase or expected to increase in share prices, share market collapse. Let us see the right answer. The right answer is increase or expected to increase in the share prices. We'll go to the next question. What is bear hug in share market? The options we have are a demotivation strategy, loss indication, acquisition strategy, fall in share prices. The right answer is acquisition strategy. So bear hug, it is a jargon used in the stock market which represents the acquisition strategy by some other company. The next question we have is who can vote in company meetings? Options are like this: debenture holders, shareholders, bankers, and SEBI directors. The right answer is shareholders, as we have discussed in the merits of stock market. So equity shareholders will have the voting right in the company general body meeting or extraordinary meetings by which special decisions are taken. So during those cases shareholders can vote. We'll go to the next question. Where is BSE located in Mumbai city? So they have given the city in which BSE is located, but we're asked to identify the specific location. The options are like this: Andheri Road, Shivaji Marg, Dalal Street, Ashoka Road. The right option is option C, Dalal Street. So this is the place, exact place where BSE is located. And the final question, fifth question is who is the present MD of NSE, that is National Stock Exchange? So these are like dynamic GK questions. Your competitive examinations also have good questions like this, but the answer for these kind of questions keep changing, so you have to update yourself. But anyway, for the time being now, the options are like this. The first option is Vikram Limaye, Ashok Pallonji Mistry, Anand Goenka, Subhash Gowda. Let us see the right answer. So the right answer is option E. This is he is Vikram Limaye. So he is the present MD of NSE. So this is the source of input which I have referred. You can also go to the sites which I have quoted here, and you can also refer the textbooks. So thank you, and we will meet in the next session.